Hey everybody, welcome back to 5 Minute Financial Markets. I want to do something a little different today. I want to show you a day in the life of a day trader. So looking at today's market action, Friday, December 2nd, I just want to walk you through what happens, the decisions I make, the charts I'm looking at as I do my day trading. So we're going to look at the SPY. This is the 1 minute chart. We're going to take you back to 6:30 a.m. Pacific time. That's when the markets are opening. This morning before the bell, we had the non-farm payrolls number. It came in very hot, which normally is a good thing when there's a lot of jobs. But of course, this is Bizarro 2022, so good economic data is bad because it means the Fed has to tighten more. So when the good jobs numbers came out at 5:30 a.m., the market tanked, dropped about, 7 points in a minute on the S&P. So here we are, opening 6:30 in the morning, right around 4:02. And we'll just take you through minute by minute as this market starts moving. So kind of chopping around back and forth. Now here we're getting close to 8:20 or so. So we're seeing a clear pattern emerge already. Now I've talked a lot in the past about how the S&P and the SPY, which is just the ETF of the S&P, trades in these parallel channels, these clearly defined parallel channels, not every day, but the majority of days. And if you can spot those early, you can day trade around those. Well, here's a perfect example. And then just a little side note, normally I'm going to completely disregard the first hour or so of trading because anything can happen in that first hour. It's sort of dominated by retail traders, and they're coming in first thing in the morning, buying whatever stock Jim Cramer told them to buy or whatever their buddy at work told them to buy. It's kind of unpredictable. But after that first hour, the retail traders generally go away, and then the professional traders, and more importantly, the algorithmic traders take over. And that's when it becomes much more pattern-driven, and you can see a lot of clearly defined trends. But today was actually an exception. We had a pretty clearly defined parallel channel almost from the open. So looking at this, I see a line forming here at these bottoms. So I'm just going to go ahead and draw a parallel channel right here. And then I'm going to take it up to the top of these. Now, you can look for the absolute tops or you can look for the opens and closes. Generally what I look for is a couple of things. One, where is it hitting the most either tops or the most opens and closes, which sometimes means you can have some of these candles pierce through. That happens all the time. A candle will pierce through a line of support or resistance. As long as it rejects back into that channel, it's still a valid channel, a valid support or resistance line. So anyway, I'm setting up these channels here to try and hit the most tops and bottoms. And then another good indicator is if your midline is winding up being a lot of support or resistance areas, you're probably doing it right. So here, this midline is resistance, 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 support, 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 support. So I feel pretty good about this channel. Sometimes you put a channel up and it turns out that you're completely wrong and you got to scrap it and start over again. But this one's looking all right. So 8:22, I see that we've got the top end of the channel, the bottom end of the channel. It's an upward trending channel, which means I'm going to be trading calls. If it's a downward trending channel, I'm going to trade puts. The reason is kind of apparent, but basically if I'm trading calls, I'm going to be buying calls at the bottom of the channel and looking to sell them when we get close to the top of the channel. The reason I don't want to trade puts when it's at the top of the channel and look to close them out when it's at the bottom is because it's upward trending. It could stay in the channel for a long time, and then it could eventually, let's say I buy a put right here at the top, and I'm looking to sell when it gets to the bottom. Well, it could stay in this channel for a really long time, and by the time it gets to the bottom of the channel, it could actually be higher than where I bought the put, and so I'm going to lose money. So I only want to buy calls when it's heading up, because that way the longer it stays in the channel, I'm getting more and more in the money. And then the reverse with puts, obviously. I want to only trade puts in a downward trending channel. So I see this pattern, I see this channel. We hit the bottom here. And again, it's still early. I'm not 100% certain that this channel is correct. So I'm just kind of testing it out for now. So I want to wait and see if it bounces off of this bottom of the channel. And once we get above this previous local high here, which is at 404.16, so right there, 404.16. Once we get above that, now I'm feeling better about it. And so I go ahead and enter a call, a same day call here. So this is a call that expires today. So I'm not paying a lot for time value. I'm not worrying a lot about theta. I'm just trying to capture the price move. So I don't want to do a long dated call. I want to buy it as short term as possible. So today is the day. I also, when I'm trying to decide what strike I want, I look at what I think the price of the underlying is going to get to, and I buy a strike that is halfway between the current price and the target price. The reason I do that is because that will maximize the gamma as an example, here I'm buying this at 404 and change. Okay, I think it can get up to here, which is 406. Okay, so I'm going to buy a 405 strike. That's right in the middle, and that 405 strike is going to maximize gamma if we do indeed go from 404 to 406. Maximizing gamma means that I'm maximizing the change in the delta of the option over that period, which means I'm maximizing my percent return on what I pay for the premium and what I sell the premium for. If any of these terms don't make sense to you, I will have options trading and options basics videos coming out soon. I'll have them linked in the comments. I'll go through what all this stuff means in detail. But if you don't know these terms I'm throwing out, definitely do not trade options until you understand those. You have to understand delta, gamma, theta, vega, and what they all mean, how they change over time and over moves in the underlying before you can trade options. So anyway, I buy the 405 strike, and let's go ahead and get this moving again. So we start moving. Now we've broken up to the top of this channel, okay? Nice quick move, great. I actually didn't ride it all the way up because, again, it's still early on. I'm still not completely confident that this channel is legit. And I know that the $5 increments on the SPY are big areas of support and resistance, which I've said many, many times before. So I bought this one here at 404.20. I actually just wound up closing right here, right before we got to 405. It was like 404.95. So I closed out for a small profit, and I'm still waiting to confirm that this parallel channel is legit. So now we get up to the top of the channel here around 842, and then again 848 here. It pierces, but quickly rejects back down. Again, like I've said, that happens all the time. As long as it doesn't confirm above, as long as it rejects back down within the next candle or two, the channel is still intact. That's exactly what happened here, and we broke right back down to the channel. Not only did we break back in, but we got back down to the midline here and found support. So now I'm feeling really confident about this channel. So I go ahead and buy another call here at the midline. Now here we're at about 405 and change with a plan to sell up here at the top of the channel. So now I'm looking for a move up to over 406. So now instead of buying a 405 strike, I'm going to buy a 406 call. Now I want to do a little sidebar here because one of the things that I'm looking at before the market even opens is max pain. If you don't know what max pain is, I'll do a video on that as well. But max pain essentially tells you, based on where all of the open interest options are for a given stock or a given asset, what is the optimal price for that asset to close at today that would make essentially Wall Street the most money. This chart here shows all of the open interest volumes for all of the calls, or sorry, all the puts. The green is all the calls and all the strikes that they're sitting at. You can see all this volume of open interest of puts and calls for today. That's that same day call option. And max pain is $400, meaning if the S&P settles at $400 today, all of these puts that are at 400 or below will all expire worthless. All of these calls that are 400 or above will all expire worthless. Now, who writes those calls? It's generally not little guys like you and me. It's generally the big Wall Street firms that are writing those calls, and it's the smaller guys like us, the retail guys, who are buying the calls and the puts. So it's in Wall Street's best interest for the S&P to settle here right at 400, and that means all these options expire worthless. They collect all the premiums. They make all the money. So this is not by any means a hard and fast rule. It doesn't always wind up settling at max pain. It does a lot of times, but most importantly, this is just something to keep an eye on, as are where are the biggest volume open interest points, and just keep an eye on those and know where those are. So going back here, I know that max pain today is 400, okay? We're currently trading as of now at 405. So I'm aware that there is going to be the potential for pressure pushing this price back down to 400. That would make the Wall Street guys happy. All that to say, we're at 405 now, and even though I've got an upward trending channel, and even though I see it's looking bullish, I know in the back of my mind that there could be pressure coming to bring this price down. So I'm going to be a little extra wary about this upward trending channel. I know that this channel may not last all day, and that's another thing you'll see. These channels that form, yes, they're clearly defined. Yes, the price movement clearly respects these channels, but they can certainly change throughout the day. And sometimes you'll have 2 or 3 channels throughout the day. You'll have one channel that guides it for the first few hours, a second channel that guides it for the next couple hours, and then a third channel that guides it for the rest of the day. So that's always a possibility. So I'm keeping that in the back of my mind. Now right around here, I'm going to play it a little bit further, but I notice price action is starting to stall. And I'm going to pull up the relative strength index, the RSI, which is an indicator of momentum. So here's what I'm looking at here. I see that we get up to this new high, and by the way, I've talked about in the past also with the S&P, if you see it just making slightly incremental higher highs throughout the day, there's a good chance that it's just going to keep doing that all the way into the close, as opposed to a big run up, a big move down, big run up, big move down. That tends to just chop around. That's less predictable, but it's those like just a few cents higher each time, just slightly higher highs that come, and you get like 10 or 12 of them by the middle of the day. Just go ahead and get long and hold on to it till the end of the day, because usually it'll just keep grinding higher. So I'm seeing that this has the potential to be one of those days that just grinds high all the way into the close. Still a little early to tell on that, but I'm keeping that in the back of my mind also. So now we get to around 9:15 or so, and I'm starting to notice a little bit of stalling here in the price action. It's not grinding and making those higher highs. It's having trouble eclipsing the previous highs, and it's sort of facing some resistance here. So I'm going to go ahead and take a look at the momentum, and I see a divergence. So we've got here, we've got a slightly higher high on the price, but we've got a very clearly lower low on the momentum over that exact same time period. That is a big red flag that this bullish pressure is running out of steam, and we could be near a top. So I'm going to go ahead and just close out my position right here at 9:15. I go ahead and close it out, and I'm happy to take profits here. And now I'm not going to look to get long until I have a better sense of what's going on. But for now, it looks like a top could be in. So we move ahead a little further, and sure enough, we break lower. We break out of the channel and start heading very clearly in a bearish direction. So now I'm going to assume that this upward trending channel is done, and we're going to have to find another downward trending channel to capture what's going on. So I connect these bottoms, connect it to the top, and again, here's a really good sign that I'm onto a good channel. All of these resistance and support touches right at the midline. So you see here, there's resistance here, it broke up and then got pushed back down here, support all the way along here, resistance all the way along here, and then support all the way along here. This is a really good sign that this downward trending channel is now dominating the price action. So let's go back here to 9:37 where the big price break lower happens. Now at this point I'm not looking to enter in any positions. I want to see how low this goes before I try to catch a falling knife. It breaks down through 405. That's the other thing. We've got a big key level here at 405, which is going to cause some support and resistance on either side. But we break through this parallel channel, U-turn back up, it tries to get back in and then rejects back down again. So now this is looking very bearish. I also want to add the 200-minute moving average, by the way. So here now it's broken through that on the way down. This is clearly a bearish bias now. And so I'm going to be looking to buy puts at the top end of this channel and close them out at the bottom. I'm not looking to buy calls anymore. So now at 10:16, we've come back up here, we've hit the midline. Now this is probably going to provide some resistance. So this is where I'm going to enter into a put position, but I'm only going to enter in a fraction of what my total position is going to be. So I bought this at 10:16. At 10:19 now it hits the previous day low as well as the 200-day moving average. So we got a lot of support here. So I do expect it to go higher, and I'm planning to buy more puts when it gets to the top of the channel. So let's move ahead a little more to 10:40. So 10:40, this is where it hits the top of the channel. So I go ahead and add to my position, and it immediately breaks through the top of the channel and heads against me. Now that's not always the end of the world. Sometimes it'll break up and reject back like we talked about. Sometimes there'll be another parallel channel directly above it. And so I'm going to go ahead and copy this one, paste another one, and just move this right up above so I can track if it's getting resistance when it gets to this midline. If not, I'm probably just going to bail on the position. Now at 11:03, it gets to that midline. And so now I'm going to fire my last bullet. This is something that is a little bit riskier, so it's very important that you manage your risk. But in this case, the put options that I already bought 40% of here and 60% of, I can buy more at a much cheaper price and lower my average cost. And so if we do get a move down, then I can recover a lot of what I've lost quickly, reduce my position, and lower my average cost. So I'm going to fire one last bullet here, but I have a really tight stop around it. So if it breaks above this this mid channel here, if it even gets slightly above it, I'm just going to close the whole position, take the loss. Luckily, it hits this line and rejects right back down. So right here at 11:08, it hits the bottom of the channel, and I'm able to close out half of my position, and I've got a lower average cost than I had here or here. So firing that third bullet worked out well in this case. So we move forward to 11:16, and we get this big upward move on big volume. Okay, this is not good. I don't like the way this looks at all. We've broken through the midline. We've got volume behind it, so there's some big money pushing this up. So now I feel a lot less confident about my position. I don't really feel like I have an edge in this market right now. I don't think it's respecting the downward parallel channels that I've created, so I'm just going to bail. I wind up being able to close out the rest of this position over here when it pierces back down through this, right below the 405. I'm fortunate to get out for the same price I paid, and I just close this position out, and I sit on the sidelines for the rest of the day. I'm happy with the money I made early on the upward trend. These puts that I bought wound up being a complete wash, but that's okay. And so we watch the rest of the day, and then things get really interesting. It winds up going right back up into that parallel channel I had at the beginning of the day. So if you see, if I extend this out to the end, you see this is the same parallel channel we had at the beginning, right? It found resistance right here. When it got to that channel, it broke above, came back and retested, found support, and then went right up to the midline where it tested twice and rejected back off, found support here, and then chopped around and then ultimately broke back through. The last hour of the day, by the way, is similar to the first hour. Very unpredictable. Doesn't tend to follow whatever channels have been driving it for the rest of the day. So I try to close out whatever day trading positions I have by like 12 o'clock or an hour before the market closes. So the first hour of the day, last hour of the day, I try to avoid completely. I try to trade these channels in the middle. And today it worked out well. I was able to make some money early. I timed the top perfectly. I started buying puts, but right around here, the market broke out of that downward channel, and I wound up closing that position flat. Sometimes it's not so much about the trades you get right, it's about how you manage risk on the trades you get wrong. And so I was able to salvage what could have been a really bad day and still make it a positive one. I hope this is helpful. I hope that this all made sense. If you have any questions, please leave them in the comments. I'd be happy to address them either in the comments or in future videos. And again, look for those videos coming out soon, explaining options, explaining my option strategy, and explaining the concept of Max Pain. If you enjoyed this content, please hit the like and subscribe button. It really helps. Thanks a lot, and we'll see you next time.